app for durable goods first, which will be out in about 10 minutes now. And as you can see, I think it's working. Me and Max are here. So as you can see at the current moment on my screen, the forecast stands at minus 0.1%, while the prior figure was at 0%. And just to remind you of a historical movement of the indicator, I would like to once again point your attention to that the orders for long-lasting factory goods remained unchanged in November. Economists expected orders would decline 0.6%. However, business investment plans fell in November. The strong dollar continued to weigh on manufacturing, and spending cuts in the energy sector showed little sign of abating. Meanwhile, core orders excluding transportation items declined 0%, while were expected to rise 0.1% in November. Durable goods orders was predicted to decline 0.7% in December, while core orders are expected to remain quite flat. At the current moment, economists estimate orders to fall 0.5% all in all in December, while non-defense capital goods, excluding aircraft or the core capex, is estimated to have declined by 0.1%, as you can see here. Let's move on. We have the experts from different banks and financial institutions, and according to their views, of course, we have the Bloomberg survey summary, where the median estimate stands at minus 0.1%, average is at minus 0.11, high estimate at 0.5%, of course, low estimate is minus 0.8, and the total number of estimates is 56 this time. As you can see here, and of course I have a quote. So here's the Wells Fargo's Sam Bullard talking on the matter, and he says that with crude oil prices under relentless pressure, the U.S. dollar remaining firm, and global growth under intense scrutiny, the December durable goods orders report looks set to signal more softness in the factory sector. On a 3-month moving average basis, non-defense capital good orders, excluding aircraft, were down nearly 3% over the year in November, a poor sign for demand for core goods. While we expect the headline orders to rise 0.6% on gains from a surge in aircraft orders, we expect orders excluding transportation to be up a modest 0.1% on a month versus the minus 0.1% expected. Let's move on. Turning to Dukascopy community member sentiment on the dollar-Japanese yen currency pair, we said that the traders are more or less bullish on the matter with 53.4% versus the 46.6% bearish vote. And of course, a couple of comments from our dear community members, but I see that I don't really have time to read them out. So I would like to pass the floor to Max, who will cover the technicals for you. So please, Max, go ahead.
Hello, everyone. Thank you very much, Kate. So let's begin with the technical part. Just give me a couple of seconds. So today we have the negative surprise trading strategy because, as Katerina has just already mentioned, the orders both on the headline and on the core basis are expected to decline. and quite significantly, for instance, on the headline basis by 0.7% in December. And for the core orders, for instance, even though the average expectation stands at minus 0.1% for December, some financial institutions like Societe Generale Bank expect a decline of even 0.8%. But we will see that in some 4 minutes from now, but let's now discuss the trading strategy itself. So we have the dollar-yen currency pair right now. As you can see, the majority of open positions are set to go short on the US dollar versus the Japanese yen. And as you can see as well, the dollar is being sold in the majority of all the cases in the market at the moment, while the Japanese yen is basically 50-50, goes to buy and to sell right now. Moving on to the current market situation, as you can see, the currency pair in the 1 minute chart is trading at 118.88 level, and for the last couple of hours, actually, the currency pair has been largely stable. But nevertheless, we can await some market reaction from the market and from this particular currency pair after the data is released in some 3 minutes from now. So as you can see, the average 5-month reaction for this particular data release and for the US dollar Japanese yen currency pair used to be 10 pips, which is not that big market reaction, even though sometime in the past, in August, the reaction reached 23 pips. And actually, since September until December, all the focus of the market was on the Federal Reserve and their interest rate decision. We have seen some light trading sessions for all the fundamentals, including the core durable goods orders. And since the impact of the Fed is slightly fading, let's say so, we can expect some more market reaction possibly today, but it will of course depend on the data, and in case we see some really negative or indeed positive surprises from the numbers, we also can see stronger market reactions. For instance, in case we have a more negative surprise from the data, we can see the dollar falling below the 200-minute simple moving average line, down to the 4-hour pivot point initially at 118.75, and in case we have much worse than expected data, then the dollar will be capable of going down to the daily pivot point at 118.64. At the same time, in case we have the positive data, better than expected one on the both headline and core basis, and by the way, in case we have also quite good unemployment claims data, which is also out in 1 minute from now, we can see the dollar also rising in value, and the first initial bullish target for this trade is placed at the round level of 119. So I have just 40 seconds to go, and let me mention the technical indicators, which actually don't say that much today, because as you can see, most of them are quite mixed on this particular currency pair for the moment, both on the short and on the long-term basis, and only the monthly indicators, which are not in our interest right now, they are showing that the US dollar is likely to increase in value in the long term. So we have just 10 seconds left until the data will be released. Let's wait for the numbers to come out. In the end, we will see them hopefully in the chat section. So we see some slight downward reaction from the dollar, just a bit of volatility from the market, and the pair is trading just a bit down to 118.77, 78. But we still are waiting for the numbers to see if they are bad. as the initial reaction shows us. So we just have some more seconds left. Yes, and here we go. Yes, there is data delay, so sometimes it happens. That's not the problem. But for the US initial jobless claims, actually it was published better than expected. As I can see, to 78,000 for the previous week, while the orders actually were worse than expected. As you can see, the core ones dropped by 1.2% in December after a downward revised data for November, which declined by 0.5% in November, even though initially we had anticipated them to be unchanged. Hopefully we will get the numbers for the headline reading as well, but if not, then not. So as you can see, the initial reaction from the dollar is of course negative for the first minute of trade. The first support level in face of the 4-hour pivot point was touched, and at the moment the dollar seems to be slightly bouncing back. Okay, I guess that will be all from my side on the technical part for this particular data release. Thank you very much for attention. See you all tomorrow, and back to you, Kate.
Thank you, Max. So guys, you can still see the numbers in the chat section. I hope that you get good trades on this news. And basically for now, that's it from our side, and we should pass the floor back to Doug, who will continue his wonderful webinar on the algo wars. So meanwhile, you know, we are not saying bye to you anyway, because we are staying here all day. Anyway, thank you very much, and see you later. Bye.
Nice, guys. Very nice.